This episode is brought to you by Katana, a DeFi-first chain built for deep liquidity and high yield. You'll be hearing more from them later in the show. Blockworks Digital Asset Summit, which is crypto's premier institutional event, is back in London October 13th to 15th. It'll have speakers from leading global funds, financial institutions, DeFi protocols, crypto companies, and policymakers. Think BlackRock, Circle, Coinbase, the UK Parliament, Jito and Marinade, all under one roof. Notable names include Joe Lubin from Consensus, Hadley Stern from Marinade, Rebecca Reddick from Jito Labs, a whole bunch of Blockworks folks, and more to come. There's a VIP dinner October 13th, open to speakers and VIP ticket holders only. That will sell out, so act fast. And it's all going down at Old Billingsgate, London. Use the code LIGHT100 for £100 off at checkout. We'll see you there. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by Tuomas, the co-founder of Collector Crypt, one of the buzziest buzziest apps at the moment on Solana. Very excited to have you here. Thanks for joining the pod.
Awesome to be here, Jack. Thanks so much for the invite.
So, if our listeners are on crypto Twitter, they've probably seen Collector Crypt and other card marketplaces kind of making the rounds on CT. But if they aren't, Collector Crypt, I guess in brief, is a digital card marketplace built on Solana that also comes with a Gacha machine, which is a sort of randomized card lottery, I guess you could say, that's proven quite popular among speculators. Is that like a kind of good way to sum it up, Tuomas?
Yeah, I mean, that's kind of what it looks like right now. We also have our eBay sniper, which I could talk about, which is like really successful. And, I would just, if you're going to throw a big towel on everything, you could say we are reimagining how collectibles are traded in the blockchain digital age. And so everything that you could do in Web 2 with collectibles, we're going to try to bring to Web 3. And then, of course, the big benefit of Web 3 is there's so much you can do that in Web 3 that you can't even imagine in Web 2. And so we are essentially building a lot of our own apps and things like that. But what we really want to do is create a platform and an ecosystem to allow anybody wherever they are in the world to kind of build platforms based on this type of infrastructure to enable collectibles to really kind of shine in this new digital age.
I want to throw up here on the screen. This was from a Blockworks research report about Collector Crypt and some other collection marketplaces that I thought was a really fascinating stat here. So if you look at the year-to-date asset class performance, there's quite a few assets that have done well this year. Gold, Bitcoin, the S&P among them, but none quite so well as the Pokemon Cards Index, which is up 61% in 2025 so far. The Basketball Cards Index, football cards, and baseball cards are all up around 20%. So if you invested in any of these kinds of cards or the indices for these cards on January 1st, you would be up more than if you had bought Bitcoin, which is quite a remarkable fact to think about. So it does seem like digital cards are having a moment. Obviously, tokenized cards in crypto is not a new idea, but I don't know, Tuomas, like having been around for a couple of years, what feels different right now? Why is the Pokemon Index up 61%, for instance?
So the Pokemon Index is up 61%. That has absolutely nothing to do with crypto. The Pokemon Index is up that much because after the COVID kind of like boom and bust, Pokemon went up tremendously during the COVID period, and then it kind of had like a 1 to 2 year bear market. And then I think in the late 23, 24, 25, it started to really come back up. And then this year, it's just gone absolutely crazy. And I think it has the same reason as many of the other kind of like speculative assets going up. It kind of coincided with the crypto kind of rise up after President Trump got elected to office. I think, you have a whole generation of young people that are Pokemon fans that feel disenfranchised. They can't really afford a house. They kind of seem kind of stuck where they are financially, but, buying Pokemon cards, they can own something that, is not only valuable as an asset, but something that, whenever you pick it up, whenever you pick up one of these things and you look at it and you feel it, it kind of takes you back to these moments in your past and history that fill you with joy, right? So, there's not many assets out there that you can do that with. You can't pick up a dollar bill. I mean, at least, I'm sure some people do, right? But I don't pick up a dollar bill and say, "Oh, wow, that feels amazing," right? But when I pick up some of my cards, and I have some of the cards that I've had for over 30 years behind me, I pick that up. It takes me right back to like moments in my past and my history that are just incredibly meaningful to me, right? And not only was that card worth $25 30 years ago, it's worth over $2,000 today. So I can kind of have my cake and eat it too with some of these collectibles. And if you look at things like inflation, collectibles are a hedge against inflation. If you look at kind of the performance of Pokemon cards, 60% in the last year is great. But if you zoom out and say, let's look at the last 30 years, next year is the 30-year anniversary of Pokemon, by the way. Pokemon is like 20 to 25% compound annual rate of return for about 25 years, right? It's been doing that since before crypto even existed. And I think, what we want to do is we want to just reimagine how to interact with these assets in a far more efficient way than people have before.
Also, just specifically to Collector Crypt, one day randomly I started seeing you guys on my feed, and I was like, "Oh, that's interesting. Why Collector Crypt? Why this thing?" And then it turned out that you recently debuted a token, which tends to accompany something unexpectedly showing up on my feed as well. So, what's the status of the kind of token launch? I mean, I'm sure there's a big burst of attention. Are you optimistic that that's going to be a lasting thing, or like how are you positioning to not just make Collector Crypt be this kind of token farming yield in the flash in the pan kind of launch?
Yeah, no, I think those are very important questions and things that, we've thought a lot about as a community and ecosystem. And, we've been building this platform now for 4 years, anticipating this moment coming. I think we had an opportunity to go out with a token launch several times. Our revenues have been okay for the past few years, but like they've really accelerated in the past 8 or 9 months since we've launched our version of what we call the Gacha machine. And the Gacha machine has just been a phenomenal performer. We've done about $85 million of packs that we've sold. And on that, we've probably generated around $7 to $8 million of net profit. And I could get into the mechanics. I don't know if your audience wants to dig too deeply into math. I've described it on other casts, but I think the numbers were what staggered people, right? You have this ecosystem on NFTs that has just been kind of dwindling and dwindling and dwindling. And that's because for a lot of NFT projects, they kind of do their mint, they get their treasury, and they relied on speculation to keep on adding more funds to the pump, right? And with that adding funds to the pump, they can go and buy back their own NFTs, they could throw parties, they could do marketing and all this kind of stuff. But all of that speculative side of NFTs went into, even a more, exciting form of crack, right? Which is meme coins, right? So a lot of the speculation left from NFTs and went into meme coins. And I think that's kind of also, you've seen like waves and peaks. I mean, I think meme coins are here to stay, but certainly, the top, I wouldn't, not the top in asset value, but the top in terms of like volume, I think has kind of set in. And, you know, I think what we've seen here is with Collector Crypt, it's kind of like, hey, let's use all of this really cool technology that we built in Web3 to support meme coins, to support NFTs, all of these kind of viral marketing tactics that we're so good at, community building that we're so good at, incentivization that we're so good at. and let's take all of this stuff and put it into something that there's 65 million people in the world do, and something that 65 million people all have, friction with and struggle with. And so when you ask like, hey, is this a flash in the pan? Trading cards have been around for 150 years, right? People have been trading cards before you and I were born. You have 56, Mickey Mantle rookie cards. I think it's 56, selling for $8 million. You have, Leary go and buy a $12 million card and start up a whole company to invest in trading cards. So, you don't have that in the real world with NFTs, right? You don't have that in the real world. You don't have Ken O'Leary on CNBC saying, I'm going to buy $12 million of insert stupid name coin here, right? So if you think about us, we are not trying to create a flash in the pan. We are trying to create the infrastructure and the community and the trust and all of the different pipelines to enable this industry, trading card industry, which is 10,000 times bigger off chain, to come on chain and be able to eliminate a lot of the friction they have. So I think the dynamic that we have at Collector Crypt in terms of flash in the pan is extremely different than anything we've ever seen on blockchain before.
Yeah, and I do want to dive a little more deeply into that math and what you've described as kind of a positive EV trade of the Gacha machine in a second here. Real quick, Gacha, it's spelled Gacha. Where does that name come from? Is that some card thing I'm unfamiliar with?
Yeah, so in the 80s, Bandai started making these machines in Japan called gachapon machines. And they had various different things, but typically you have a machine with a bunch of different collectibles in it, and there were some collectibles that were very rare and some that were fairly cheap, right? But every single time you played the machine, you got something out, right? And so these machines would be set up at convenience stores, wherever it was. Um, you know, so Bandai made that first one. Bandai is the big video game manufacturer. So I think they actually started out with, maybe it was earlier than the 80s. Maybe it was like even 70s or something. But they started out with gotcha machines and then they moved into video games, right? So that's kind of where some of the stuff came from. In 1996, before the Japanese original base set of the Pokemon card game came out, there was a Cardass, and it's kind of funny to spell it, Carddass. So Cardass was a trading card vending machine. So it's a trading card gotcha machine that predates Pokemon, but the Cardass vending machine actually featured Pokemon imagery on it, right? So it was a licensed IP, and they came out first. They have a green version and a red version, extremely collectible. And so what we wanted to do, we wanted to throw back to some of that old nostalgia and name our machine a gachapon machine, and feature some of that really cool original, here's how these cards were launched, right? To kind of tie into that meme.
Katana is an L2 built for DeFi, and it's pioneering the ecosystem category of productive TVL, believing that chains should be graded on how efficiently assets are put to work in DeFi, rather than just total value locked. In just a couple months, Katana has surpassed $500 million in TVL, with over 90% of that TVL being productive in ecosystem on apps like Sushi and Morpho, which also receive boosted yields from Katana's unique Vault Bridge design. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added Vault Bridge yield, and other chain revenue. Major app launches will be coming down the pipeline in the next few months, with incentive campaigns for the Kensei meme coin launchpad and Perpstex partners for Katana. With the launch of Katana's chain-wide V tokenomics model, VCAT holders will be at the middle of the Katana flywheel, directing emissions and earning fees for their votes from partner protocols. Thanks, Katana, for making this episode possible. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. The 80s and 90s. I remember them well. Not really.
No, you don't.
But, okay, that's interesting context. So, this is a Solana show, and the reason I was interested in having you on specifically is that Collector Crypt is built on Solana and makes use of Radium under the hood. So can you just walk me through the crypto and Solana specific parts of the Collector Crypt product?
Sure. So, I mean, all of our NFTs are minted using Metaplex smart contracts. Metaplex is kind of like the top infrastructure provider for all of the Solana ecosystem. All the meme coins are minted on Metaplex. All the NFTs are minted on Metaplex. You have the original NFTs like the, DGen Ape Academy NFTs were the original smart contract. Essentially Metaplex built the NFT smart contract to allow DAA to go and mint and SMB as well. They've created from there, they went to programmable NFTs, then they went to compressed NFTs and core NFTs, and then they have these, hybrid NFTs, all of these things kind of like their design engine. They have such phenomenal engineers. So, we've just been, very, very thrilled to be able to work with Metaplex on all of this for the last 4 years. In addition, we're partnered with Magic Eden, so we rely on Magic Eden's marketplace APIs and things that they've built. We did our initial mint and launch of our trading card kind of community and collection with Magic Eden. It was probably one of the most oversubscribed mints that existed. We had, I think, we had about 175 mystery packs, and each mystery pack had a random trading card that you could get. And we minted 175 of those within one block of Solana, which is about half a second. I think we had 80,000 page views and 8,000 simultaneous wallet connections to mint 175 packs. So this interest in kind of what we're doing has been there for a long time, but I think what's really kind of taken off is we wanted to launch our token. And Metaplex came to us and said, "Hey guys, you've been here for a while. You're generating some decent cash flows. We really want to launch your token. And hey, let's go and see if we could do it. Right? We're coming up with a new mechanism that is going to be less degen, that is going to avoid sniping these coins when they come out. That's going to allow some price discovery and some safety for people to come in." And so, I could talk about that launch pool mechanism. I think it was really, really innovative. And it's actually a throwback to some of the older launch pool mechanisms with ICO days back in like 2017, 2018 time period. But what we really wanted to do was do a safe launch for people, because a lot of the launch pads, when we talk to them, they're kind of like, yeah, here's our success list, and they show 10 projects, and they're like 20x, 30x, 100x, and this and that. And every single time I see a big X number, what that means to me is that, okay, this is how hard KOLs and VCs and the launchpad itself dumped on your community, right? And what we're building is community first, right? Like we will lose our arms and legs and stub our toes and hit hammer nails through our forehead before we do anything that's going to hurt our community, right? Because I think that's our core kind of like asset in our platform, and it's also our biggest competitive moat. And this is why, even though there's competition now on Solana, we have Fidgetals and some of these other guys. Whenever we turn on our Gacha machine, when we do a restock, we are literally hammered. All of our inventory disappears within 30, 35 minutes, just gone. And so, we attribute that to kind of the strength of our community and our followers and their belief in our trust and transparency as a platform.
Do you think that building on Solana has been like a comparative advantage for you relative to Courtyard, which is kind of the um, traditionally more popular, maybe trading card platform in crypto, but I believe it's built on Polygon, right? So, do you think that the hype and scalability around Solana has been especially beneficial?
Absolutely. I mean, I think this wouldn't have been possible building on another chain. I mean, I think Courtyard is a great example of a very innovative founder. I mean, Nico's very forward thinking in terms of how to build that company. I think Courtyard leaned very heavily into Web 2 early on, and really hasn't done much marketing recently to crypto audiences, to any of that, right? So they're focused really on advertising in Instagram and TikTok, and finding making their platform have a great UX for Web 2, and it does, because that's where all the there's a ton of money in trading cards in Web 2. We took the other route. We believed that Solana, building a great product and great product market fit, we could iterate so rapidly within Solana and within Solana communities and ecosystems that we can really, find what we would call a superior product market fit, and that kind of led into the design of our Gacha and kind of some of the other features that we have on chain. And our idea is to really optimize that using some of the smartest people on the planet, and then go and then access the Web2 marketplace with kind of a much higher product market fit. And some of the things that we've deliberately done, to this day, we've spent $100 in marketing. We haven't spent any money on Twitter ads. We haven't spent any money on KOLs or influencers. We haven't, tried to push any paid press or anything like that. These are things that all of our competitors on Solana have done, as well as Courtyard in the real world. And one of the things that sure, it's hampered our growth a little bit, not by much, but what it's allowed us to do is really build kind of like an excellent product market fit and an excellent kind of community, because our community is like honestly 100% referrals and 100% people just enjoying using the platform and telling their friends.
Mm-hmm. Have you explored deeper DeFi integration in Solana? Like I'm thinking lending or something like that.
Yeah, it's definitely on the roadmap. One of the things that's interesting about trading cards, so like when you're lending NFTs and stuff, you look at the floor price of the NFT, and you assume that some of these markets are pretty liquid in terms of the floor price, and that was true. Maybe not so true right now, right? And then you also had a lot of peer-to-peer lending. You didn't have peer-to-pool lending with NFTs. One of the interesting things about trading cards is that it's very difficult to figure out what a card is worth today, right? So you can have a card that is pretty rare, and the last time it traded was at auction, a year and a half ago. Like, and as you said, Pokemon's been up 60% this year. It was up a little bit last year, and that's the overall index. This specific card, it's very hard to figure out what that's worth today. So how do you go and figure out, well, how much am I going to borrow against it? So, the obvious answer that we usually get is to say, well, you have two people, they can negotiate on what the terms are, and then you get it done. And for high value cards, I think that's absolutely fine. The issue is when you get into what a normal trading card collection looks like. You might have 300, 400 cards. You might have, 20 cards that are worth $10,000 or more, and the rest of them might be worth, $200 to $500. Can you imagine going and negotiating a peer-to-peer loan for 300 different assets? And those peer-to-peer loans also tend to be short term. So then you have to go and redo that every few weeks. That's not really a feasible kind of way to do it, and it's not the right way to do it to onboard people in Web 2. In Web 2, people are used to going and taking their entire collection, it gets appraised, then they underwrite and originate a loan for 6 to 12 months, right? At like, 13 to 15% fees. And so what we don't need to make a better product for NFTs. We need to make a better product for trading cards using blockchain technology. And so the first step to do that is to create a pricing oracle. And we're in development now to build the world's best pricing oracle that uses graph neural networks and some other really cool technology that will be able to accurately price some of these trading cards that have very sparse trading data behind it, right? Because you don't need to get the price perfect, but you need to be able to say, is this card worth $2,000 or $5,000? Especially if you're going to underwrite a 40 or 50% LTV loan, right? And the whole idea here is that we want to allow anybody to come in and borrow money against their cards, without origination fees, with reasonable like yield that they're paying, like maybe 9 or 10% to be competitive with the 13 to 15% in the real world. And then to also be able to enter and exit the loan as often as they want, right? So you can borrow $100,000 worth of USDC against your collection, go to a trade show over the weekend, buy a bunch of cards, do a bunch of trading, and then on Tuesday, you can pay back that loan, right? This is something that Web 2 is not ready for, right? And so we want to make sure that we build a really good product before we launch that kind of DeFi, because it will almost certainly be used. The collateralized lending in Web 2 is one of the largest drivers of kind of this card turnover and card acquisition phenomenon that we've been seeing.
When you mention you're building the world's best oracle to price these assets that have sparse trading data, what are the considerations, or like what's insufficient about the current oracles that exist? Because when I think about an oracle, it's like, okay, I need to be able to handle a ton of data and a blockchain in Solana that creates a crazy amount of new data every day and runs very, very quickly. But this is almost the opposite problem, where it's like there's not enough data and we need to maybe, I guess, predictively create prices where they may not exist. So what are the considerations for that kind of oracle exactly?
Yeah, so for blockchain audience, I'm going to try to use words that blockchain people will understand, but people in Web 2 won't. So each card that you have has certain attributes, right? And the attribute could be like a special hat or whatever it is, or a certain quality level or certain rarity, right? So trading cards like this one here, they have a triplet of information. They have what the actual card is, they have a number, and then they have what the grading company is. So with this triplet of information, you could essentially identify any card specifically, right? There's a bunch of cards that have this exact triplet of data, but that triplet of data is what you could precisely determine that card value. And if you look at all of the transactions that happen on trading cards, there's a lot of them that are, a card might trade 5 or 10 times a day, right? And being able to just take, hey, what's the average price of that card that trades 5 or 10 times a day? It's very simple to come up with, here's what the market price is, right? And so if you are optimizing for those types of trades, you would probably take this whole data set and run it through a GLM, a generalized linear model, and then come up with kind of like, here's what these cards are worth today. As expected, where these pricing models really fail are for cards that don't trade that often, maybe trade once every few weeks, maybe trade once a year, right? For a specific triplet of information. But what you can do is you can cluster these triplets of information. Like this card here, you have a grade of 9, right? In this card cluster, you'll also have a grade of 8, a grade of 10, 7, 6, and 5. You will also have a PSA card. This is a CGC card. So you have a PSA 9. You'll have a BGS 9, right? So you can cluster all this information around the card. Then you also have other cards that are from the same set, right? So this card may have appeared in the same pack. This card has a certain year. And if you go and take all of that data and make nodes in a neural network, use them as factors, then you can go in and say, well, maybe this specific triplet hasn't traded much over the past so much time, but this kind of cluster around this triplet is up 30%, right? So maybe we take what we believe that card was worth a year ago, bump it up by 30%, and then figure it. And that's kind of how the graph neural networks work. They're far more complicated than I just described. But so I guess what we're doing is we're trying to take the best in machine learning and apply it to solving this really, really hard problem in trading cards.
Katana is an L2 built for DeFi, and it's pioneering the ecosystem category of productive TVL, believing that change should be graded on how efficiently assets are put to work in DeFi, rather than just total value locked. In just a couple months, Katana has surpassed $500 million in TVL, with over 90% of that TVL being productive in ecosystem on apps like Sushi and Morpho, which also receive boosted yields from Katana's unique Vault Bridge design. From now until the end of November, users that bridge to Katana can earn boosted yield from CAT incentive campaigns, added Vault Bridge yield, and other chain revenue. Major app launches will be coming down the pipeline in the next few months, with incentive campaigns for the Kensei Memecoin Launchpad and Perpstex partners for Katana. With the launch of Katana's chain-wide V tokenomics model, VCAT holders will be at the middle of the Katana flywheel, directing emissions and earning fees for their votes from partner protocols. Thanks, Katana, for making this episode possible. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. So, Tuom, the first clip I saw of you on a podcast was from the Thread Guy one you did last week, I guess, or maybe earlier this week, where you basically said that Collector Crypt has created a way to make using its Gacha machine positive EV for the user, which to me set off some skepticism alarm bells. So I want to talk it out live. Explain to me why that is the case, that you have a positive expected value. So, if you use the gotcha machine infinite times, you would end up making more money than you put into it.
Yeah, so first, you can't use the gotcha machine infinite times, as our community proves to us every single day by selling out instantly. Um, and I think it's also about positioning and perspective, right? When I say positive EV, I mean like you put in $50, and on our normal machine, you'll get $55 of market price as a card in return. So, there's a few assumptions there. What exactly is market price, right? Market price we determine by looking at the average auction price of that specific triplet of cards on eBay and other auction marketplaces. So other platforms, they might use buy it now price, which tends to be 5 or 10% higher. So, just be very careful when you're looking at other platforms with EV, because if they have a positive EV, that doesn't necessarily mean that you're actually getting positive EV, right? So we use the auction price on that. And one thing to think about, like if you look at a normal kind of trading card store, right? A retail store is going to buy, let's say they buy this box at, $45, right? And let's say the box is worth $55, right? So they're going to, the retail price of this box, the market price is 55. They could sell it on eBay for 55. But for people that are in their community, for people that know that they exist, who are regular customers, they sell this box at a $5 discount, right? So that store is still making a $5 profit on this box, but they are, giving a 10% EV to their users versus what those users could buy it for on a global kind of marketplace, right? And that's kind of similar to what we do. So we buy our trading cards at 85 to 90% of market price, and we then, pass on some of that market price discount to our users. And so if somebody came to our platform, bought all our cards out and did not use that buyback mechanism at all, those cards would list for eBay on average. Of course, there's some errors in here. We're not perfect. They would list on average for 10% higher than the amount of funds they put in the machine. Hence, they get a 10% positive EV if you're looking at eBay auction market price. So we make a little bit of money there if people take all the cards out. That's one extreme. If you go all the way to the other extreme and you say, okay, we have somebody who's never going to keep a card. They're just going to use the machine over and over again and sell back everything, right? So what does the economics look like on that side? So that's selling all the cards. So we just talked about keeping all the cards, 10% positive EV, selling all the cards. What that looks like, because we're giving the cards out at 10% positive EV, we are buying those cards back at 85% of market price. So that actually works out to be like 6.5% below the value of that $50 pack, right? So we are essentially generating $3.25 of gross profit for, if all the cards are sold back because of that buyback mechanism. It's not that much because we also have an incentive of free points, and the points add up over time to give you free packs to open, right? So each, the allocation per pack for free points is around 75 cents. So if somebody sold back all of the cards, we would be generating about $2.50 per pack of profit, right? So you have the two extremes. We are people taking the cards out at 10% positive EV. People are buying back all the cards at essentially negative 5% EV, right? And the whole thing here is there's a really nice window in there for people to really choose how they want to interact with the platform. If you really want to go and get a bunch of cards at a relatively low price, don't sell any cards back. If you want to go and concentrate your pulls, if you want to go only after the rares and the epic cards, the really hard to get cards, you're going to pay a little bit more, and you might be paying 5% over market price on average for those cards, right? So the whole idea here is that we give a range and we let the user kind of pick how they want to play it. The reason why this is so successful is that if you have deep pockets and a lot of money and you live internationally, and it's hard to find some of these really special cards that we find for the machine, it's cheaper actually, for example, if you're in Europe, to play the Gacha machine and pay 5% over market price than it is to buy those cards on US marketplaces, right? Because of all the issues around international. So what tends to happen is that if you sell back all of the commons, right? People don't want a stack of $50 cards. There's no utility there for them. They're hunting these special grails. So the people who are really sniping and looking for the best cards in the pool, they will sell back all the commons. They will sell back all the uncommons. They might keep some rares, and they'll keep more epics in our platform. And when they keep cards, they're keeping those cards at essentially a 10% positive EV. And so when you do the math, it kind of ranges to be, we are able to sell cards that enter the machine at like a 4 to 5% higher than market price, right? And remember, we're buying those cards at a 10 to 15% discount to market price. So our spread is like 20-25%.
What would prevent like this essentially mispricing from closing, where you're saying that card dealers, if they have a pre-existing relationship with you or something, will sell you cards below market price. But now that the Pokemon index is up 61% this year, it just strikes me that that's a bit of an arbitrage that may begin to close, just as there's more pressure to buy these things, and the card collection world becomes a bit more competitive than it was previously.
Yeah, I mean, in a world where all the card trading happens on chain, and you're able to eliminate all of the friction with respect to cards, then yeah, I agree. I mean, there's going to be some competition to do it, right? But given the fact that what's on chain right now is, 0.5% of the total, trading card economy for Pokemon, and we haven't even really brought sports cards on chain yet or anything like that. You're looking at, uh, you know, our market share being way less than 1%, right? And the Web 2 world doesn't have the kind of financial rails that we do. They don't have the opportunities for gamification, for incentivization, for dropping down global barriers, for instant settlement, right? So the real world is going to be struggling with all of this friction that we've already eliminated 100%. So we have the opportunity to go in and create a better way to trade cards, eliminating all of this friction. And it's impossible for our Web2 competitors to come up with a better product unless they also come to crypto, right? So, yes, absolutely. I've heard the argument that, hey, your margin compression and all this kind of stuff. But, physical repacks, the EV in the real world is about negative 30%, right? So, and we are giving digital repacks at a 10% positive EV. It's going to take a lot of work to do that, and because we are so small, our opportunity to grow and take over this entire market, is unprecedented. So yes, you're right that over time margin will compress, and this is exactly why, I'll talk about our roadmap a little bit. Anybody could come in and create a digital, front end, a digital repack front end. I mean, we've seen so many competitors pop up. I saw Fidgetals there, like the team, by the way, not trying to fund them. Um, we see people come up with a new way to do this kind of mechanic. Um, they are not going to be able to compete with us because we have been working on our physical infrastructure side, our relationships, our competitive moats on card acquisition and card pricing. Remember, the only way this is profitable is if we are able to continually pick up these cards at a discount to market price. And if there's pressure on that market price, dealers coming in, and in fact, this last week at the Dallas Card Show, it's kind of funny. We hear from a bunch of our different dealers, and a few of them were there. They're like, "Oh man, there's so much card buying going on. There was a group there buying $1 million worth of cards, and so we have one card buyer complaining to us about our other card buyer there with $1 million." Right. So, we are essentially, have such deep connections that we are working with all the different dealers to try to buy these cards at the rates that we want. And, we've built these trusted relationships over years. So I think it's very hard, for example, for a competitor to come with a new kind of like UX and say, oh, run this thing. And then all of a sudden they say, oh shit, how am I going to get all of these cards? Right? They can't hit a button and mint 10,000 NFTs. And if they do hit a button and mint 10,000 NFTs, they're probably breaking the law. Right? So the physical side of it, the physical scarcity, the physical relationships are what's going to enable us to succeed.
How often do users like claim? I'm assuming you can like claim your physical card and pay shipping on it or whatever. How often do people actually do that versus just put them back into the collector crypt economy?
Yeah, it's interesting. Like, when new people join the platform, I think there's some skepticism, right? They might, put $5,000 into buying some cards and they're like, well, before I put any more, I just want to make sure this is real. Right. So they'll stop whatever they're doing, they'll buy the card, ship them out. And then the next week they're coming back, putting, 100, $200,000 a week into the platform to buy more cards. Like, some of our whales, they've put seven figures of cards into their portfolios on chain. And then of course those same whales get six figures of airdrop when we launch the token. So, some people did extremely well, right? And that's on top of their trading cards going up 60%. They start off redeeming a little bit to do kind of a test, and then they kind of look around their home room where they're storing these things, and they have stacks and stacks of cards, and they're like, man, I don't need all these stacks of cards on my desk, right? I'm not going to go through 500 cards and stick them on my lap and say, oh, that's a precious card. I love that card, right? So what we typically see is we see people redeem some cards, and then what they feel is kind of like a long-term hold. It's much better for them and much safer for them to keep those cards on chain, right? So you have this natural progression of a new user redeeming a lot of cards, becoming a mature user, redeeming select cards that they do want to look at on occasion, that they do want to showcase on their wall, right? But then the bulk of their collection is maintained on chain. So that's kind of the user progression that we see.
And then just to come back to this central question of the collector crypt economy, I think you could paint a picture of a world where there are some number of people out there for whom cards are a big hobby. They really like collecting Pokemon cards and so forth. And those people are going to be sticky users no matter what. There's another class of people who maybe were trying to position themselves for a token airdrop or are just seeing this new collector crypt thing and they like to try out new stuff on chain. And so, yeah, sure, I'll put a couple $100 in. And so during that period of heightened activity, both the demand side for these tokens or for these cards is elevated because you have a bunch of speculative users, and I guess the supply side of new cards being sold back to the protocol is also higher. But in a world where the maybe those core users stick around, but the speculative people go away. What will keep this marketplace actually liquid and prevent it from being a situation where that plus EV trade essentially goes away because people are like just trying to get rid of these cards but don't want to buy new ones?
Yeah, I mean, I think that's a valid question. And again, I would say that we have this massive Web2 economy that could soak up 100% of the liquidity on blockchain in a few days, right? So it's never going to be the case where, hey, this kind of demand cycle ends and people are not looking for airdrops and that kind of stuff, and then the whole collection dumps, right? The people in our community, we weren't even using the word airdrop, and we were still doing, seven figures of volume per week. And then people, when we announced that, hey, we're going to be launching with Metaplex, we got some more interest, and people came to our community and said, oh, is there going to be an airdrop? And we said, no, there's going to be a non-drop, and it's going to be worthless. And we use that type of terminology because the one thing that we don't want to have is to stimulate some of these like pump and dump kind of like ecosystems, right? We purposefully did not, give a cheat sheet to anybody that said, here's the following things we're going to consider for our airdrop. And here's the allocations, and here's what you should do. What we purposefully told everybody is just use the platform the way that you want, the way that would bring you joy, the way that you want to interact. And if that happens to align with what we believe we want people to do for the platform, you're going to get pretty rewarded, right? And if it doesn't align, then we need to learn and we need to figure out, like, how are you using our platform in a way that's beneficial for everybody, that we didn't reward, right? So it we didn't want to have, like, some fake numbers to go out and some fake wash trading. So, like, we didn't incentivize any, like, marketplace transactions, because that's a very manipulable thing. And we told people that, hey, it's all going to be linear. It's all going to be, there's not going to be, like, if you click a button to participate, you're not going to get 10 tokens. There's none of that, right? So it's true participation, true utilization of our platform that got airdropped. And, like, honestly, like, we airdropped to like 2,025 people. I picked the year to airdrop, and we cut everybody off that was below that threshold. Not a single person complained to me about not getting enough. And I think that's incredible. And the other thing that's incredible is that the airdrop claim on the pool was a little bit delayed, right? And everybody was so concerned that, oh, the launch pool is 5% and you're giving out a 2.5% airdrop. Isn't that big relative to a launch pool size and all this kind of stuff? Just for a technical reason, the airdrop claim was delayed by around 15 minutes. When the airdrop claim went live, the token kept going up, right? So nobody in our community was selling it, right? And I have never seen that in crypto before, where an airdrop claim for nearly 50% of the live tokens goes live and your token continues going up. And so, like, I just want to hammer down the point that none of our performance, none of our revenues was airdrop farming. This was all pure people in our community that have been with us for years, that earned the token because they believe in the platform.
But in some sense, like the continuation of the economics underpinning Collector Crypt depend on that, like, Pokemon and broader cards marketplace continuing to operate the way it has.
Yeah, I would agree with that totally. And that's kind of why we're also getting into, and I'm not worried about the Pokemon asset class right now. I mean, it's been around for 30 years and it's just done really well. And yeah, there's boom and bust cycles. We've been through one already and survived. I think, what our platform does during, now we're in a big bull market for Pokemon, right? I think what our platform does during a bear market is we build up inventory, we find even better deals, we use our cards treasury to pocket a lot of these cards for a future day, because we have such good penetration and knowledge of the ecosystem that we can buy collections, we could buy these things instead of at a 15% discount, we can buy them at a 30% discount to market price, because when there's no buyers, if somebody needs to sell a collection for a few $1,000,000, we will be the buyer of last resort all the time. So I think it just changes what we do, and we're basically building up the cards portfolio for a better day, right? But our knowledge and experience is still going to continue adding alpha and continue adding value to the cards token even through
I
bear
also
markets.
wanted to ask a bit about you mentioned kind of what allows you to sell cards a bit below cost is the fact that you have these relationships with card merchants, and also you mentioned like a proprietary eBay sniping tool. I'm curious to hear a bit about how that works,
Mhm.
the eBay sniping piece of it.
Sure. So eBay is, like I said, they're the record holder for collectibles marketplace. They put billions of dollars of trades through eBay for cards every single year. And I think they're kind of like an awesome, liquidity, font themselves, right? So a lot of people go there and buy cards all the time. A lot of people sell cards through eBay either directly or through what do they call them? I forget, resellers or whatever. What we do, because we are building this pricing engine, we actually go and scrape eBay every single day, and we pull down, 3,000, 4,000 auctions for trading cards that they are auctioning off, right? And then we run it through our proprietary pricing model. It's not yet public, and we might select, 500 to 1,000 of those that we think are good fits to go in and place a bid on. And we usually place the bid at 20%, 15, 20% under market price. And we win anywhere between, probably around 100, 150 cards per day from eBay. On Sundays, we win more. That's a big day for trading cards. And so we built that infrastructure, one, to basically have an ability to just kind of have a constant flow of cards on chain that we're buying at a discount, right? Because, in the card markets, like sometimes there might be a big buyer that is just, throwing money around, like last week at Dallas, which was us, right? Or you have, you know, you might have like sometimes when, nobody wants cards. Like 3 or 4 weeks ago, there was a big sale on all the ponchos, right? So poncho Pikachu's, it's kind of like a class of full art Pokemon, Japanese Pokemon that's really, really kind of like iconic. And those had gone up like 200% this year. And so people were kind of, taking some profits on that. We could have bought, $500,000 worth of those in one day, like a few weeks ago, and we stopped because we had so many people coming to us with these cards, right? So, essentially all of that knowledge, we pipe it into our eBay kind of like buying program, to help us, flatten out what we're doing. The one thing that's really cool though is after we built that infrastructure on eBay, we are allowing our users to plug in their own uh, wants into that sniper program, right? So we have our sniper list, we run it every day. A user could go in and say, I'm interested in this card right here, and drop in the eBay ID for that card. And then they can escrow USDC. So let's say it's a $10,000 card. They can escrow 11, whatever they want. They can escrow $9,000 and try to buy it for 10% under. Or if they really must have that card, like it's one of these cards that trade, once a year, they might put in 12 or 13,000 just to make sure they get it. Right. So they go in and they put that snipe, they escrow their USDC. That adds that card to our order flow on eBay, and we bid on that auction 2 seconds before it closes, right? And if they win that card, wherever they are in the world, it could be somebody in South Africa, right? Wherever they are in the world, they win that card. They're paying with USDC, no transaction fees, no sales tax because the cards get shipped to our vault in Delaware. They're not paying tariffs, they're not paying all this kind of stuff. And then, the best part is that the vault gets the cards a few days after the auction and authenticates the cards, right? If they're in South Africa, the card takes a long time to get to South Africa, and then it probably sits in customs for a long time. And by the time they get it, if they get a brick, maybe the opportunity to return the card or to say that it was fraud has passed, right? And even for a small card, let's say it's $100 card, maybe they're just like, no, it's not worth it, right? I'm not going to sit on eBay for an hour dealing with this, right? So if you use our system, you're cutting out a tremendous amount of fees. You are reducing fraud tremendously, and you basically have the team's back to go and harass the seller and harass eBay for any auctions that don't go the way as planned, right? And we're experts at that. I'm constantly on eBay, like with 5 different auctions a day, just arguing why, what they shipped me was not what they advertised, and why, it was fraud, or why it was this. So we're experts there. And so it's a much safer, cheaper, friendlier way to buy cards, right? And that's what we did. And at this point, we've done around $15 million worth of bids on eBay, and we've won, maybe $2 million worth of cards for our users using that. And we're not charging much. We're charging 1%. So our quote unquote profit on that is $20,000. But this is one of the things that we've just kind of added into our existing pipeline. It doesn't really cost us anything. And it's something, that provides extreme utility to our community. And that's that's some of what we're doing. Some things we make money on, like the Gacha machine. Some things we really don't make any money on at all. But that's what causes people to stay in the community.
Speaking of the pipeline as well, one thing I wanted to ask you about is there was a Blockworks research report I referenced earlier by Kunal Doshi here at Blockworks. I'm yet to meet him, but He wrote a good report, and just kind of on the cards meta, so to speak. And one thing he pointed out is that in a lot of the kind of digital card sort of slot machine world, live streaming is actually a pretty popular thing to do. So like Stake is like a huge gambling platform, and they'll like pay people to just use the platform and live stream themselves. I believe Drip offers like a live stream for cards, but Collector Crypt and most others are yet to. Is live streaming something that you would foresee yourself pursuing either internally or with a partner or something like that?
So there's a few different kind of live streaming that we think of. One is like, you could have a streamer that's playing the Gacha machine and educating their audience about how it works and that kind of stuff. So yeah, I mean, that's kind of like low hanging fruit. We're going to do that. Some people already do it. Like you could find people using our Gacha machine totally unaffiliated with us on Twitch. As I mentioned, we haven't spent any money on marketing yet, right? So, what those users typically do, they can get their free ref code. Anybody could get a ref code on our platform. It's gacha.collectorcrypt.com/user, and you could pull your ref code off there, and then you could just open up a Twitch stream, and then people click your ref code link, and you'll make 10% of all the points that your users make, which adds up to quite a bit, right? So that's what people are doing right now, and yeah, we are going to when we have a few last things that we want to change on our marketplace to make it a little bit more Web 2 friendly. But once we get there, then yeah, we will start probably spending some marketing dollars to sponsor content going out to more Web 2 audiences, right? Because it's a little bit hard. There's not crypto Twitter. There's not. I guess there's not a crypto Pokemon, right? That we could go in and virally infiltrate. So we have to spend a little money there, which is going to break my heart because I won't be able to say we've only spent $100. The other place where live stuff goes is with box breaking. And I'm not going to say much. I'm not going to reveal much, but the answer is we are absolutely cooking. And I think people will be shocked when they see what we're building.
I'm excited to be shocked. That's maybe a good place to end it on. Bit of a cliffhanger. But that is all the time that we do have for today, sadly. Tuom, it's been fun talking with you, man. Thanks for coming on the show.
Thank you so much for inviting me. You've been amazing.
If you've made it this far into the episode, if you enjoyed, we'd love if you gave a like or a 5-star review wherever you get your podcasts. If you enjoyed this episode, please share it with a friend, and we'll see you all again very soon.